So Ben, you were talking about something recently about living benefits. What are living benefits?
No, that's a great question. And living benefits is something that we're very passionate about in our office. With life insurance, everybody knows what a death benefit is, right? I mean, Jared, what do you have to do for your life insurance policy to pay a death benefit? That's right. It's the end of the road, right? So with life insurance, though, a living benefit is a rider that's tied to the policy that allows clients to access some value out of that policy in those situations where they didn't ultimately pass away. Mm-hmm. They're still alive, but they've encountered a significant health issue. So the living benefits rider is basically built with three parts. It's a terminal illness rider, a chronic illness rider, and a critical illness rider. Okay, so let's start from the very beginning. So terminal illness riders, they're pretty common. Yeah. They come on basically every policy that's out there. That's where if you become terminally ill, and what I mean by that is, a physician's note has determined, hey, you are, going to pass away in the next 24 months. Typically, those life insurance policies will allow you to access part of that death benefit now to help, final expenses, preparation, and to just have some money out of that policy. The chronic and critical illness riders are the true, in my opinion, living benefits that can really add value to, to a client's situation where, hey, we've dealt with, we've had a heart attack, a stroke, found out we had cancer, things of that nature where, you're actually able to, through that living benefit rider, you're actually able to access a portion of that death benefit. Now that death benefit isn't just there for when you die, it's there for when you're alive, and it creates changes that death benefit to a pool of dollars. So now, if you have a significant heart attack and now your life expectancy is impacted, shortened considerably, you can actually tap into that policy, get money now. So, on top of all the, the stress of dealing with cancer or a heart attack, you don't have to now stress your retirement assets or, sell a piece of farmland to replace income or to pay medical bills.
So with living benefits, you no longer have to actually die to use your life insurance policy.
100%.
If you have a heart attack, if there's a cancer, stroke, major illness, these are things that are common to happen to people over the next 20, 30 years of their life. So it's basically it's a life insurance policy while you're alive, and a good chance that someone's going to have to use it.
Absolutely, and what we really stress and just try to educate clients about is that when you're looking at life insurance as a risk management tool, whether it's for debt protection or income protection, for your loved ones, sometimes having a significant health issue, can be just as detrimental as actually passing away. So. If these types of riders allow clients to access value from that policy in those other situations, then it puts a client in a much stronger position to actually get something out of these policies that they're paying for.
We had a client a couple of years ago that had living benefits. We've shared this story before, but husband and the wife had a stroke during the birthing process of their child.
When the kiddo was on the way, yeah.
And she was out of work for a period of time, recovering in the hospital. The husband was out of work, taking care of the kids. He wasn't working as much. And they used some of their living benefits, life insurance policy, to pay the mortgage, keep the lights on, pay medical bills down, and it worked well for them. And after she got out and she used some of the death benefit, and she just, either had the remaining, going forward.
Perfect. Yeah. So, and I appreciate you bringing that up. That's the number one question we get. Once they pay a claim through a living benefit, what happens to the remainder of the policy? Well, typically, what happens is if say you have a $1 million policy and you have a event that triggers your living benefit to pay some funds out of the policy. So let's just use a number, from $1 million total policy, you had an event, it accelerated $250,000 out of that policy. Essentially from that time forward, you're carrying a $750,000 policy. So the remainder stays intact. It's still part of that contract, and it will go, if it's a permanent policy, it'll go forever, and if it's a term policy, it'll be there for the remainder of the term.
And how much do these life policies cost with living benefits? Does a person have to sell a kidney to get one?
Great question. There are two things. So the as far as the cost goes, living benefits is fairly common with permanent policies, but with some of the partners that we work with, we actually have term insurance policies that have living benefits. And when you compare the lowest cost term carrier versus a carrier that offers living benefits, it's pretty minimal. I mean, to me, it's maybe it's 8%, maybe it's 10, 12%. Every situation is a little bit different, but usually when we show the cost difference, it typically is a no-brainer to add the living benefits. It really is.
I know that. So my personal life insurance policy renewed yesterday, as the money came out of my checking account and I saw it, and like, oh yeah, I still have that policy in place. No, but so that policy, I remember I got that.
Well, you've got living benefits on that policy.
That's where I'm going with this.
Exactly.
I put that policy in place many years ago before I could grow facial hair.
There you go.
And that policy, I think it was like an extra $30-$40 a year for a policy with living benefits. I mean, it was a no-brainer at that time for me.
Right.
And looking at it.
No, and it's something that, when a client goes through one of those situations, it's just another great peace of mind that, hey, this policy that I bought for maybe final expenses or for, death can actually help you in this situation where, in this type of situation where you've, again, had a significant health issue. Again, it's another pool, another asset that you can go to without having to stress, other accounts. So,
and if people put living benefits on a permanent life insurance policy, that can also be used down the road for long-term care assistance.
That's a really good point. That's so that's going to be more the chronic illness rider. Part of the living benefit riders is where, if you have 2 of the 6 activities of daily living, right, that are impacted where you're not able to perform those anymore, that's where you could access. It's not a true, just to be clear, it's not a true long-term care plan, but it does have a lot of features that will get you some assistance if you have, a long-term care type claim to get some funds, for you and your family when you really need it. So
absolutely perfect. Anything else on living benefits?
No, I think at the end of the day, if you're reviewing your current policy and you don't know if you have living benefits or not, I mean, definitely we're here to help to take a look at that policy, and if living benefits could really add value to your risk management strategy, we'd be more than happy to take a look at an option with living benefits for you.
Awesome. Thank you, sir.
Hey, you bet.